You're watching Global Watch on CGTN. Now let's turn to an extraordinary marine traffic jam. The company says that's trying clear a ship blocking the Suez Canal says it may take weeks to remove the vessel from the busy shipping line. Officials stopped all ships entering the canal on Thursday. 9 tugs are working to move the vessel that got stuck on Tuesday amid high winds and a dust storm. The 400-meter Ever Given is blocking transit in both directions. More than 200 large container ships and tankers are backed up. The Suez Canal is one of the world's busiest shipping lanes, linking Asia and Europe. Trading oil and refined fuels, grain and other areas relies heavily on this waterway. So, it is vital to trade from Suez Canal. About 10% of global trade, including 7% of the world's oil supplies, passes through the waterway. Goods worth nearly $10 billion are transported through the canal every day. The traffic jam interrupts the supply chain of multiple materials, including oil, liquefied natural gas, clothes and supermarket basics. It all comes amid rising demand for consumer goods due to the pandemic. Blockade also prevents the return of empty containers. That exacerbates container shortage caused by the pandemic's disruptions to shipping. Now, for more on that, let's cross live to Mr. Xu Zhonghua in Singapore. He's the General Manager of International Headquarters at Worldwide Logistics Group. So, Mr. Xu, you're an expert in global marine shipping. Tell us, is the industry ready for this kind of black swan impact?
Okay, it's indisputable that Suez Canal is one of the world's busiest shipping channels for oil and refined fuels, grain and other trade, linking Asia, East Africa, Oceania and Europe. Up to this early morning, 259 vessels were queued up from 186 Wednesday. It includes 148 southbound ships and 111 northbound ships. It's going to be tough to come up with a single figure for how much the epic traffic jam in the canal is costing, but shipping rates are already skyrocketing. The cost to ship a 40-foot container from China to Europe has climbed to about $8,000, almost quadruple the figure a year ago. Suezmax vessels, which typically carry 1 million barrels of oil, are now getting about $17,000 a day, the most since June of 2020. If the stranded ship cannot be removed in a short time, other ships will have to go around the Cape of Hope. For the ships that have been blocked in the Suez Canal, the northbound vessel need to sail 8,200 nautical miles more to bypass the Cape, and about 20 days more. And if the ship not reach yet the Suez Canal, it will also need to detour for at least 10 days. This will further increase the tension in the supply of capacity and push up the rent of each ship type.
Mr. Xu, who will pay for this accident?
Okay, so from the perspective of ship types, the blockage of the canal has more impact on the oil tanker and the container ship market, but less impact on the bulk cargo market with grain, coal, fertilizer, steel, and oil as the main cargo. As the main transport mode of cross-border e-commerce, container shipping has also been impacted and challenged. In recent years, the continuous rise of cross-border e-commerce has posed more challenges to international logistics. Especially after the outbreak of the epidemic last year, the business model of international e-commerce logistics has also changed greatly. Before, we used the direct mail mode of express and partial delivery after orders from overseas customers. From 3 years ago, we started to set up overseas warehouses in the European countries. Before we got the order from the customer, the e-commerce platform will ship all these goods to the overseas warehouse and then directly send from the warehouses to European customers against their order online. Therefore, we have accumulated a lot of inventory in the warehouse of many European countries so that we can continue to deliver goods to customers to minimize the negative impact of this incident.
Thank you very much, Mr. Xu Zhonghua in Singapore.